Hi guys, welcome back. Today we're taking a look at some of the Chinese stocks listed in the US. Before we begin, remember to take a second to give the video a like and subscribe as you greatly help our channel. Without further ado, let's first start off with Tencent. So for Tencent, you can see that after it created a new low, it found a bottom near the 36.57 levels. And at the same time, you can see that currently now this previous support level, which was very strong, is currently acting as a previous support has now turned into resistance. So if we are not unable to actually punch up above this level, then it's likely for us to continue to trade downwards. As of now, in the event that we were to pull back, then we're looking towards these two support levels, which is one will be around 40.50 levels, and the other one will be just below this $40 psychological support level, around 39.70 levels at this rate baseline. On the resistance on the way up, you can see that this 38.2% and 42.30 acted as a strong resistance. If you can punch up further, then 44.08 and 45.85 is the next two resistance for Tencent. Not forgetting, we are already approaching the cloud, so on the way up, the cloud will definitely act as a resistance. If we cannot punch up further, it's likely for us to come back down to retest these 36.57 lows. Moving on to Alibaba or BABA. So for Alibaba, you can see that it is slightly stronger. Even though we broke through all these supports, we actually found some good support at this 23.6% at around 89.30 levels. Tested once, twice, and the third time we broke through. But this particular day here, you can see that we actually still finished pretty well, even though we created a very much like a new low. And thereafter we see a bounce. Unfortunately, this bounce was met with some resistance along its cloud, so we still see a pullback, and there was also a heavy volume sell down on Friday itself, so that is not really a good sign. If we cannot punch up above the cloud resistance, it's likely for us to come back down to this $86 or even potentially 7801. That said, the resistance to watch would be 101, 106, and even 110 levels, which is still pretty far away. Support levels to watch would be quite nearby at this blue conversion line and this red baseline here, somewhere around $95, $96. Moving on to NetEase. So for NetEase, you can see that it's pretty volatile, and these two red candles is pretty significant. You can see that even we hit this cloud resistance, we pull back down and we test this 38.2%, which is a very critical support for NetEase after having tested it and was being supported for a couple of occasions. So in the event that we were to come back down, then 88.70 is the next support in line before 83.96. If you were to break down, then it's likely for us to see 78.10 or even the $80 psychological support being tested. For now, the resistance to clear would be somewhere around this cloud resistance, which is somewhere around $95. If you can punch up further, then the target would be the $100 psychological resistance to clear. Moving on to NIO. So for NIO, you can see that it's pretty well supported by the clouds on this particular day here, and it coincides with this 50% Fibonacci around $18. So if next week, for some reason, if we were to break down further, then the next support in line would be 16.55. That's it. If we can punch up, and we are currently above the 61.8% around 19.56. If we can punch up further, then it's likely for us to hit back to 21.70. And if we can punch it above this 21.70, then potentially we can go back to retest this recent high of 24.43. That said, if we were to pull back down next week or even upcoming trading sessions, then 1950, which is this blue conversion line, is acting as a strong support. If not, we will likely to come back to revisit these potential levels here, which is just around this $18 psychological support level, or this low was 17.73. Let's move on to JD.com. So for JD, you can see that actually we already had hit very much like a double top formation. You can see that this was the recent high here, and we already hit the recent high. We saw a huge sell down on Friday itself. You can see that it actually broke down the cloud support and found some good support around this 23.6% to 38.2% around this $53 to $54. So we saw a huge rebound on these three particular days, 1, 2, 3, and on the fourth day there was a sell down. So in the event that we can punch up further, then 68.29 would be the target. If we were to pull back down, which is likely the case, then this $60 psychological support level will act as a strong support for JD.com. Moving on to Baidu. So Baidu or BIDU is a very similar situation to JD. You can see that this is very much like a double top here. And there were many sellers who actually appeared above these $150 psychological levels. So it's likely for us to pull back down next week, looking at this, how bearish this red candle is and how we actually close the week. Hopefully, if we can pull back down, we can find some support along these 140 levels, around 141 levels. That's it. This 61.8% is a key support level for 135 for this Baidu. If you would pull back down further, then 130 is essentially the last support here. You can see that's being tested once, twice, and even thrice. If you were to break down this cloud support, then things may start to turn ugly, even potentially 122 or even 114 levels. Next up, we have PDD or Pinduoduo. So for Pinduoduo, you can see that on Friday itself, similar to other stocks, we had a very bearish looking sell down and the volume was essentially quite high. So things to note is that it actually broke out the cloud resistance, but we came back down after breaking above this $60 psychological support levels. So if we would pull back down next week, then $54 would be a critical support to hold for PDD. Essentially, we also can come down to close this particular gap here that was created on Wednesday and Thursday itself. This 61.8% for 430 is a very critical support. If you were to break down, then there's a high chance for us to retest this 38.2% at around 45-40 levels, which was being well supported here by buyers. But this time around, there's a chance that it may start breaking down in the event that we were to test it and see no rebound. If we can punch up above the $60 psychological resistance once again, then slightly put us in a very good position to potentially test this recent high of 68.71. So let's move on to some of the ETFs. So we'll first start off with Crane shares or KWEB. So for KWEB, you can see that there was a very strong gap up on Friday itself, while we were met with a heavy sell down and extremely high volume. So that is not really a good sign. So it's likely for us to pull back to these levels here next week, which is around 29.50 to 29.60, which is just actually just 60 to 80 cents away. For now, you can see that 30.2% is well supported at around $27, $26. If you were to break down this time, it's likely good for us to actually see this 26, 23 being tested once again. Hopefully on the way down, the cloud will act as a support around this 29.04. It coincides with this 50% Fibonacci support level. If you can break up, then 32.08 and 34.36 is the next two resistance or targets for KWEB. Moving on to CWEB. So for CWEB, it's a very similar situation. You can see that this red candle here, so the 61.8% actually did not break above, even though we opened above this 61.8%. So we actually closed below this 50% at 60.66. You can clearly see that the CWEB is slightly weaker and we are really trading at 23.6%, only to see a rebound after breaking this $50 psychological support levels. So the next support to watch for next week will be around $57, $58, which is near this 38.2% and $55, $56. If you can punch up above this key, $65, $66, then it's likely for us to revisit this $70, which is also the strong psychological resistance for CWEB. Moving on to our last particular analysis on FXI. So for FXI, you can see that we are actually below the cloud support. And on the way up, the cloud will act as a very strong resistance. So you can see that it traded sideways for a while, and then we managed to break out. But even if we did break out, that we are met with cloud resistance, it's likely for us to pull back down in the event that this blue conversion line and red baseline do not hold, which is around $30 psychological support level. So if this 30.50 and this 29.48 do not hold next week, then things may start to turn ugly for us to potentially retest this 27.83. If we can punch up, then 32.16 and 33.33 may be the next target for FXI. So overall, you can see that most of the Chinese stocks, or in fact all stocks, saw a huge sell down on Friday itself. We will see if next week is able to have a strong rebound and whether or not it can break out above this respective cloud resistance. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, appreciate the manipulation.